What's up, YouTube? Welcome back to the channel. Appreciate you guys being here. Another portfolio update. We're sitting on 171,555. Today, I want to give you guys an update on some recent buys when it comes to Microsoft. Wanted to share a little bit more on my Amazon Leaps call that I have a pending order. Want to talk a little bit more about Meta and some other little plays that I'm thinking of having here with some of these at the bottom. So I'll share a little bit more about what I'm thinking with these companies. So let's dive into it. So to get us started, I have this Leaps contract here on Amazon and it expires January of 2027. So I still have a couple of months, I want to say until like August or September for me to get out of this contract before Theta starts to ramp up. Seeing a favorable returns here for Amazon. So as you can see here, we saw a 13% return before we saw a little bit of a drawdown. And as we go to 3 month, even bigger. So this is what I meant, 30% on the month, which is crazy. So Amazon has had a great run. My contract is now very, very deep in the money. And as you can see, I have a 97 delta. At this point, my Leaps contract is just acting as, a substitute for shares. I have not much leverage, but this is fine because this is what we want to happen. We want the contract to go so deep in the money and the contract to raise so much in value that you can have a 50% return in just the couple of months that you bought it. And we actually were at a little bit higher of a return before today because we saw a little bit of a red day today. So this is what I'm thinking with my Amazon Leaps. This will free up a little bit of cash, around 15K, if we get that fill at 150. So this is what I'm thinking of it. Get out of this contract. I think we've had a good run with Amazon. I'm still very bullish on Amazon, especially with their logistics and AI. I think they're going to benefit so much from AI. So very bullish on AWS and Amazon. I think they're a massive, massive player in this industry, especially with logistics. They're, a logistics company. They ship so many packages every day. They're investing a lot of money in robotics as well. And AI is just going to be the cherry on top for these people. So Amazon is one of my core holdings here when it comes to my Leaps. And I'll talk a little bit more about Meta as well. We're actually trading down on the day, and I'll share with you guys what I think on Meta. The goal here is to find a company that is growing their earnings per share, but has a disparate valuation. So Meta today trades a 22 PE ratio. Meta is trading at a lower PE ratio than Walmart. Like, take that into consideration. I don't think we're going to see another good time to buy Meta again. Maybe ever. And I'm not trying to be this guy that FOMOs into stuff. They start monetizing on all of the AI spend that they've been having. This company is going to explode. So as we see right here, we had an all-time high of 785. I think it was closer to 800 actually at one point. And today we're trading at 599. As we can see, some of the analysts are telling you to buy it. And I don't take much of this into account, I'll be honest. Analysts are always saying whatever. But what I do like to see is their earnings per share trajectory. So as you can see, going back all the way from 2024, they had a much lower earnings per share. And as you can see, we saw a little bit of a drawdown here. Overall, they're trending up when it comes to their earnings, but their valuation is still kind of beaten down. So these are the companies that I think I like to look at. As you can see, a lot of these analysts are saying that they have a fair value of $850. And I think we can see Meta trade at these levels, if not this year or the following. It just takes, one earnings report, a couple of good news for these companies to start trading up like crazy. As you can see, like Google traded up 140% in the last 12 months. And I think Meta and Microsoft are getting the Google treatment. They're trading at a 20, 22 PE ratio for no apparent reason. So I'm long Meta with a Leaps call. And I went with the Leaps call because I get a little bit more exposure. So this is my contract right here. I have a 340 strike price expiring on 2028 in January. And if you look at my delta, which is what we want to look at right here, I have a 92 delta. So this contract represents 92 shares of Meta. I only spent $32,000 to have control of 92 shares. And sure, it comes at a cost, right? Implied volatility plays a role into the contract, and theta, which is time decay. These two are what influence the extrinsic value of the contract. However, this contract is so deep in the money with the 92 delta that most of the option price is intrinsic. So time decay and implied volatility does not affect my contract as much. So that's why I'm a fan of leaps, because theta and implied volatility are what kills these options contracts. So it's like boom or bust. And that's why you see all these Reddit posts on Wall Street bets of these people making so much money, because implied volatility either spiked up and their contracts now worth so much more money, or even the underlying went up so much. Whatever it is, that's why you see such big moves. But our contract here is very, very conservative with a 92 delta. So this is why I'm a fan of leaps, and we're long Meta 92 share. We won't talk much about Google, but we're having a 3% drawdown here today, which is actually healthy, honestly, because Google has run so much in this last couple of months. Seeing a little bit of a drawdown gives us a little bit of consolidation at these higher levels. But we can see like the price consolidate in the 370, 380, 390, which is actually healthy for the long term. So this consolidation period is actually good. So don't be super scared with it. Don't start selling Google just because we traded down on the day. I still think Google's going to be the best player when it comes to AI and AI infrastructure, but we're not here to talk about Google. I want to share a little bit more about Microsoft. I bought a couple more shares. We currently hold 55.9 shares, so basically 50 shares at a 409 basis. So we bought a couple more shares here. This is actually my cash back from my gold card. So super happy that, this is basically free money. So I was able to buy like 0.4 shares of Microsoft just by using their gold credit card. So that's another super good perk. And then I bought another 4.5 shares earlier today, and I've been buying all the way down. And I wish I had more money whenever they're trading at 350, but I wasn't super liquid at that time. But I've been buying now in the 410s, in the 401s. You see, I opened my position at 401 here because I really did think this was going to be the very bottom. As you can see, there's like older buys over here. Got a little dividend, which is always nice. I sold a share, not sure why, but I've been, building this position now for a couple of months, and I'll probably still keep buying. And this is always crushes my heart whenever I see my older buys and sells. So as you can see, I sold Microsoft at 243. I would have doubled my money if I just held. Isn't that crazy? So you see, I bought $1,000 worth of it back in 2022 again over here, 255. So this is crazy, guys. I've been doing this for a little while now, and buying and holding quality companies beats almost like anything else. But at this time, I didn't have much money. In 2020, check it out, 226. Now, if I bought and hold, let's say that 1.7 shares plus 0.2 shares plus another share, what does that give? I used that money to actually run a business I was running where I was able to make a lot more money, where now I'm able to buy 7 shares, 4 shares, 24 shares. I have more money to allocate to these positions with much more conviction at great prices. This is where we sit with Microsoft. We're currently at 23,070, representing 14.7% of the portfolio. We're also long with MSFU. And this is our MSFU position, which I plan to hold very short term. So let's think like a couple of weeks to a month, maybe 2 months until we see a bounce. I do think Microsoft's going to bounce and start trading higher in the coming months, especially with all these good news that we've been seeing with the divestment of OpenAI and Microsoft. I think a lot of the negative sentiment around Microsoft was OpenAI's involvement with the company and how much weight that OpenAI had on Microsoft's business. So happy to see that they're not in an exclusive agreement anymore. They do still partner up and share a lot of revenue, but it's not like a big driver of revenue for Microsoft anymore. We have $9,000 here, and you got to keep your ratios in check. This represents 6% of the account. $9,000 is a lot of money, but it is 6% of the account, and that's how we have to treat it as. I don't want you guys, putting like 30, 40, 50% of your account into a double, triple leverage ETFs. You can get burned. This thing moves like insane, and it's only double leveraged. Imagine if you buy something like TQQQ or SOXL, which tracks the AI and memory stocks. Like, you're kind of playing with fire. And I know it's very tempting. I've done it. I used to trade TQQQ back in 2022, and I got burnt because there's a major tech sell-off back in the day, and I ended up catching a bag. I had to hold and double down at the bottom and wait like 12 months for the thing to come back. So now I trade a lot more conservatively when it comes to these underlines. So this is our Microsoft position. We hold around, let's say like 30K worth of Microsoft right now, but our exposure is actually a little bit higher. We have closer to like 40, 42, 44K worth of exposure to Microsoft. And that's mainly due to our double leveraged ETF right here. So that covers Microsoft here for us. A couple more shares that I picked up. Netflix is actually trading down weak in the past couple of weeks. Let's look at Netflix right here. They were actually kind of having a recovery here on April at 107. And look, if we track right here, we're actually down 9%. So that's kind of crazy. If you take into consideration, we're trading at 107 not very long ago. I do hold 82 shares at 87 basis. I might buy a couple more shares and make this a 100 share position just because why not? I think Netflix at 85 is actually a great buy. We'll wait. We'll see what happens here. We might go back to this kind of support level at 75, but not sure, so we'll wait and see what price action. It looks like we broke support, and you see there's no support for the underlying here at any of these prices because we shot up so fast. And if we kind of broke this line right here, as you can see, like, I'm not into technical analysis, but whenever you actually break it down, it makes a lot of sense. And this is not my Bible. A lot of people just trade on TA. I don't recommend you do, but it is interesting to check it out. This right here is Robinhood Legend. So I do like the RSI and the MACD. And I don't use technical analysis all very much. I'm not into trading like that anymore. I do think you can spot good times to buy. As you can see, we're trading at the lower frames here on the RSI, and we actually broke this support line over here. Coincidentally, great time to buy. This can hold some sort of truth, but I wouldn't just trade off of technical indicators. So back to Netflix right here, this will make a little bit more sense. So as we expand here on the 3-month, you can see like support being right here on the 90s, and we tested that support for a couple of trading days, even a couple of weeks, but now we lost that support line, and it seems like we're trading down to this other line over here to the 75s because we traded up so much. We had no support lines over here. So, I wouldn't take this with much weight. Stocks are straight off sentiment as well. And whenever you only look at numbers and technical analysis, you can't really look at sentiment, which I think drives a lot of action because retail price action goes through retail investors like myself and you. So, and mostly it's on sentiment. Like, you're telling me that chips memory stocks are trading off of fairly valuation. This is just something for you to think about. Robinhood Legends actually pretty cool. So I do like the RSI and the MACD. 50 and the 200 moving averages are also great indicators if you want to get into this stuff. So as you can see right here, we saw a 50 moving average crossing over the 200, which is bearish. So as you can see, we were actually trading at a much higher level back before this cross right here, and ever since it crossed, we are only seeing pain for Netflix. Until we see the 50 cross over the 200, we could see pain for Netflix. This is where we sit with Netflix, and as you can see, we're kind of overbought at these levels over here too, according to the RSI, and that's why we saw a major pullback as well. Just thought I'd share this with you guys as well. Usually, honestly, don't go in here and look much at these technical indicators, but it is fun to understand, like, why is it trading down? Like, is it off technicals only? Is it off sentiment? I think it's a combination of both a lot of times, but it is important to understand like how these stocks kind of trade off of different indicators that you can set up, like the RSI and the MACD. There's multiple others indicators. I won't get into all of the different indicators that I think worth pursuing. This is just not what I do. But I do understand the RSI, MACD, the 50 and 200 moving averages. And I think if you have an understanding of all those four, that should be good basics for you. So just for fun, let's look at Micron, which is a memory stock. As you can see, we've had a legendary run for these people, and it's overbought. I mean, it says it's overbought on the RSI. The MACD just looks all out of whack. Like, look at this thing. And you look at the price action right here, we're actually trading at like closer to 800, trade 8% on the day. So that's why I stay out of these hype memory stocks. And I understand they make a lot of money, and Micron is one of the biggest players, and they're not going to go anywhere. I understand that. But, these valuations are just insane to me. But we took a little tangent here. Let's get back into the portfolio. So to close out the episode, as promised, I do want to cover a little bit more on these other plays. And these names are, a little controversial. Rigetti Computers, IonQ, they're both into quantum computing. ASTS and Rocket Labs, they're both into data centers in space and just space technology in general. But it's important to understand, like, is it worth putting money into this, and how much money should you put into it? Like, is it 1% of your account? Is it half of a percentage of your account? I think I'm a big fan of IonQ. If you look at their balance sheet, they actually hold multiple billions of dollars. And I think it's healthy. They return more than $100 million in revenue. They're one of the healthiest quantum computing companies. So between IonQ, Rigetti, and QBTS, I think IonQ is the best bet. However, as you can see, they're all returning a lot. I'll sleep on this, and I would love to learn from you guys as well, where you think these are going to go. And if you're still watching this, don't forget to subscribe and leave a like. I appreciate you being here. But, talking about Rocket Lab and ASTS as well, I think with the SpaceX IPO coming later this year in a couple of months is going to be a major catalyst for these. These are, again, cold stocks, guys. I mean, if you go on Twitter, like, these people are trading these and they have such big positions on all of these. And it's just kind of insane to me. Like, if you've heard of Iron, they just seem to trade off of hopes and dreams. And I'm a very risky person when I trade, but I don't think, but honestly, this type of risk is just probably not for me. Maybe if we allocate like 2% of the portfolio, right? So like maybe like $4,000, just spread it out against all of these names and then see where it lands in 12 months. Maybe that could be a good challenge for the channel. Maybe that's something that, we could do. I'm just not super interested in, putting much money into these stocks because they move like insane. So let's just go to IonQ, for example, which I'm a fan. So as you can see, we traded up 15% on the day. Like what's going on? So let's just look on the week. Like, we're up 20% on the week. Like, this stuff just trades crazy. And honestly, all this technology is so new. Like, we don't know which players are going to be the best. And as you see, I put $1 and I already have $1.21. So imagine if I put like $1,000, I would have had $200 of gains. So this is where I sit with some speculative plays. I'm not necessarily against them, but I do think it's important to have proper allocations to these. And not because I don't believe in quantum computing or space exploration with Rocket Lab and ASTS. I think it's more because these companies are not proven. This is not a Microsoft trading at a 20p ratio. But, when you think of IonQ, for example, like, are they going to have this growth for the remainder of their journey, right? Like, I don't know. Like, I just think I don't understand quantum computing as deep as I should, I guess, to have much of a conviction on these underlyings. Like, look at this all-time high, like $82 all-time high. And then we traded down to like 40. So like a 50% drop in a matter of like 30 days. Like, what's going on here? This is this type of stuff that like will keep you up at night. Like, check this out, trading at 26. What is this, like a 70% drop? I just don't get it. So maybe in the comments, you guys can educate me on these companies and why it's a good bet. But this is where we sit for now. Portfolio sitting healthy at 171.5. Appreciate you being here. Don't forget to subscribe. If you have any ideas on what I should do with my 15K, should I put it all into IonQ? Let me know in the comments. Don't forget to leave a like. I'll talk to you guys soon.